Hi there, welcome to the Ecofina Financial Channel. My name is Philip, and as usual, I'll be talking something about finance, investment, and the economy. Today, the focus is on nothing else but about the newly increased interest rate by the Central Bank of Nigeria. So on Tuesday, the Central Bank of Nigeria, coming out of their Monetary Policy Committee meeting, announced an increase to the monetary policy rates, which is the interest rate at which the central bank lends to commercial banks. So they increased that rate from 13% to 14%. You recall that at the last meeting of the MPC in May, they increased it for the first time in almost 6 years to 13% from 11.5%. But now again, the central bank has increased it to 14%. So what's the implication of this? Clearly, the Central Bank of Nigeria is trying to tackle inflation because when you tighten the economy, usually it's in response to increasing prices and trying to reduce the amount of money in circulation. So the move by the Central Bank of Nigeria is actually targeted at reducing inflation, which has hit 18.6% per the last report of the National Bureau of Statistics. Now, inflation continued to increase despite the fact that the CBN in May increased the interest rate to 13%. So how it works is that, of course, there will be increases in the interest rate even offered by commercial banks to those who save and those who invest as well, which will make savings and investments more attractive. But in spite of that, it doesn't seem to be having the necessary effect or the effect that the Central Bank of Nigeria is expecting on the economy. So clearly, economic growth, which is also low, is not the focus right now, because usually when you want to increase or improve economic growth, you want to loosen the economy. But the CBN sees the inflation as a greater objective, and that's what they are doing at the moment. Also, when you go through the MPC communique, see that there has been a lot of intervention funds. But today we'll not be looking at that in detail. We'll probably talk about that in another video. But despite spending trillions of naira really in intervention funds, it also doesn't seem to be affecting the economy that much. Inflation has still been on the increase. The FX isn't any better. And that's where the issue is at the moment. I'm sure you must have heard of the RT 200, the new non-oil exports initiative by the Central Bank of Nigeria to boost foreign exchange inflow into the country. And then you probably have heard of the Naira for dollar as well. But both do not seem to be having so much of an impact on the economy at the moment, no matter what anyone tries to claim. But why do we think inflation is unlikely to come down with the new initiative of the central bank? That's because, first of all, the fuel price has been increased. Immediately, it was on the same day that the central bank announced an increase in interest rate to 14%. That's the same day the NNPC, the newly launched NNPC Limited, also announced an increase to fuel price all across the country, with the minimum increase, I think, happening in Lagos with an increase of just 4 naira. Other have higher increase, I think, taking into account the transportation costs to those locations. Or ordinarily, that would affect inflation, because almost everyone has to use fuel in one way or the other, that to power generators or for cars, or even when moving from place to place in public transport. That's an essential commodity. And with that increasing in price, it's unlikely that even the CBN's move will have any impact. And then secondly, the FX management, the foreign exchange management has not been good at all. And that definitely will make that inflation to persist. Because right now, the difference between the exchange rates in the official market and the parallel market is almost 200 naira. That's too high. And like we said before, there's no way that the funds will not find their way from the official to the parallel market, which isn't good for the Nigerian economy. And when you look at how long it takes for companies and businesses to access foreign exchange from the official market, you will know that no supply chain will be able to survive given the length of time. People wait for several months before they are able to move funds out. That ordinarily affects the flow of businesses. In fact, the International Air Transport Association, IATA, recently disclosed that airlines have about $450 million trapped in the Nigerian economy, which they've not been able to move out. And they also warned that that would lead to an increase in the prices of flight tickets. So those are the challenges. So there has to be a better management of FX, especially when we also consider the fact that Nigeria economy is import dependent, and a lot of people are accessing the parallel market where rates are going off the roof to bring in funds. They won't bring it at the parallel market rate and then sell at the official market rate. It's not possible. Otherwise, they'll be running at a loss. So, and unless CBN can find a solution to the FX situation in the country, which might involve floating the naira a little, and also stopping some of the loopholes, especially in some of the policies like the CBN Naira for dollar, where the CBN believes that that is helping the diaspora remittances. They have to consider the number of immigrants out of Nigeria to be able to come up with how effective that policy has been. So those are some of the issues, and and that's why the inflation is hardly going to respond to the increase in interest rates. Let us know your thoughts in the comment section. Let us know what you think about the new interest rates and what impact you think it might have. And we'll be back with you next time. See you then.